Hi, this is Spencer, founder of Synapse Trading, and today I'm going to talk about how to tackle fast moves in the market. Now, recently we have seen the stock market, right, like the indices, the S&P 500, Dow Jones, where we have seen some really extreme price movements, right? Some movements so large that they have set new records in history, right? Every day you are looking at moves of 3 to 4%, up and down. So a lot of people have been asking me, how do you tackle such fast moves in the market? Now, for most people who haven't been trading much, or they're only used to seeing the stock market, they may not realize that such extreme price moves are actually not that uncommon when you look at other markets. For example, if you look at the forex markets, the futures markets, especially if you're trading on an intraday basis, right? So like back then when I was trading, for professional funds, when you are staring in front of the screen the whole day looking at these intraday price movements, you realize that such sharp moves are actually pretty common, right? Especially on days when there's news that's announced. So you usually see such large price movements. So to us professional traders, we're actually quite used to seeing such fast moves, and over time we have developed strategies to trade them. So how can retail traders tackle such fast moves? So if you are not used to it, the best strategy of course is to simply stay out, wait for the dust to settle before you come back in the market again. If you want to trade the market, there are a couple of strategies. I'll say the two common ones are first, the breakout and momentum, right? So usually you look for when the price is sort of like ranging, right? Then there'll be a breakout followed by a strong momentum. So if you're fast enough, you can enter near the point of the breakout and capture the momentum. And if the move is strong, usually there'll be multiple entry points where you can enter and ride the momentum, and then you need to get out fast once the momentum stops. So that is the first strategy. The second strategy is to fade the extreme moves. So for example, when the momentum is going really strong in one direction, at some point of time, the momentum will sort of run out, right? Slow down. And then that's where you can actually go in and fade the market, meaning you take an opposite direction. So if the market is shooting up really quickly, when you see the momentum slowing down, you initiate a short position, right? At some point of time, you may have to take multiple short positions, but at some point of time, once the market has run out of momentum, it will start to fall down, right? So these are the two main strategies, right? Momentum as well as fading the extreme moves in the market. But I'll say the most important thing actually, is to have a game plan, right? So most people, when they enter the market, right, without a game plan, basically you become part of someone else's game plan, right? So basically you are putting money into the pockets, right, of those who have a solid game plan, right? So let me explain what I mean by a game plan, right? So a game plan is something that you create, sort of a simulation before the market opens, right? So you can think of it as sort of like your roadmap, right? So if you look at the market, so for example, if the market has fallen sharply, right? So what is your next step, right? So maybe your game plan could be something like, when it drops to this extreme level, I will start initiating some long positions, right? And that's kind of like what I did, right, for the S&P 500, right? So when after a 6-day sharp decline, right, and at a certain level, my game plan was I started initiating long positions, right, to fade the extreme points, right? And then part of my game plan was when I was expecting the market to rebound, right? And then after the rebound, right, at a certain price level, my game plan will be to start closing off my positions, right, and maybe initiate a short position, right, which is what I did as well, right? And then after that, I will expect it to continue to go into the range, right? So the thing about the game plan is that you have very specific rules on your entries, and your exits and your stop loss, right? So once the market is moving, right, all you are focusing on is really just executing your game plan, right? And what is the danger of not having a game plan, right? Because once the market is moving, right, and this applies to trading in general, but it is more crucial when the market is moving fast, right? Because the faster the market is moving, the more emotional, the more stressful it is, which is the harder it is for you to make decisions on the fly. So it's even more important, you know, for you to have a game plan, right? If not, you'll just be like, you know, a headless fly chasing the movements of the market, right? So if you don't have a game plan, you know, the moment you see price start to move out, you know, move up, immediately you'll be thinking like, wow, this is bullish, you know, I have to go long, right? And the moment it starts to drop, you know, you'll be thinking, wow, it looks bearish, now I have to go short, right? And the market will keep fluctuating, you know, and you will just be always trying to chase the price, right? If you don't have a game plan on where exactly you want to enter and exit the market, right? So I would say overall the key takeaways, right, is, you know, to remember to have a game plan, right? And your game plan should mainly revolve around momentum, right? Getting the momentum and the breakout, and also fading the extreme points, right? So these are two simple strategies that you can work with. All right, so if you enjoyed this video, do subscribe to our channel for more such videos, and also check out our Telegram channel, right, where I post my market analysis, right, on a day-to-day basis. And also do check out our website for a lot of free trading guides. Right, so that's all for this video, and I'll see you in the next video.